Bitcoin has reached new highs.
Trade? Are you sure?
Not a trade. I'm trading crypto.
And I'm laying out my plan to ensure that the United States will be the crypto capital of the planet.
You know, it's impossible to forecast what's going to happen next.
Bitcoin has come a long way since its start in 2009 as a way to cut out the middleman in simple payment transactions. It's increasingly become a popular way to invest, and its value reflects that. In 2024, Bitcoin's value shot up to over $100,000. This surge comes from the SEC approving the trade of spot Bitcoin and other exchange-traded funds in 2024, which allows big Wall Street firms to offer crypto investment products. It also comes after the Trump campaign's embrace of crypto.
And he said, I'm going to tell the SEC to greenlight all these crypto products. And we're going to have a national crypto reserve. This has sort of reinforced that crypto is going to be treated differently under the new administration.
David Yermak is a finance professor at NYU's Stern School of Business, where he teaches a course on cryptocurrency. So, if you're curious about investing in Bitcoin or other cryptocurrencies, here's some important things to consider. Bitcoin is digital currency bought and sold directly without the use of a third party, like a bank. To obtain Bitcoin, buyers can go through cryptocurrency exchanges, stockbrokers, Bitcoin ATMs, exchange-traded funds, money transfer apps, and wallet software. It can also be mined.
What happens every 10 minutes is that people around the world gather together all the Bitcoin that have been transferred in that window of time, and then validate the transactions using the codes that are internal to the system. And you sort of have to solve a puzzle by trial and error to mine a block successfully. And whoever mines the block first, and this could be anybody in the world with a computer, they get a prize.
Whoever mines the block first is rewarded in Bitcoin. In 2025, the prize is 0.3 of a Bitcoin. After it's mined, it's permanently added to the blockchain, a public digital record of all Bitcoin transactions. Once obtained, Bitcoin is then stored in a digital wallet that's made up of a unique set of numbers and letters. The wallet can be online, on your computer, or on an external hard drive. Crypto is open to trading 24/7, 365 days, in contrast to America's stock exchanges only open during business hours Monday through Friday.
I think for investors, that's very attractive.
And while some see Bitcoin's benefits, experts also heed caution.
Crypto is very volatile. We've got, at this point, 16 years of history. And I think there have been 5 or 6 times where Bitcoin dropped 80% in value in a very short period of time.
Although it's called cryptocurrency, in many ways, Bitcoin is more like a good than currency. Bitcoin's value is determined by its supply and demand. The supply of Bitcoin is fixed. There will only ever be 21 million coins produced. It's estimated that all the coins will be mined by 2140. When the supply is scarce, the price goes up, and vice versa.
But with Bitcoin, it's purely speculative value. And this may be unnerving to you, but I would point out that the US dollar has exactly the same foundation.
Demand, on the other hand, goes up and down for a variety of reasons, including global events. Take Brexit as an example.
The day they voted to leave the European Union with Brexit, the British pound took a huge hit and Bitcoin went up.
Why the rush to Bitcoin?
And there are a lot of people who think Bitcoin is sort of a safe haven, an alternative to gold or an alternative to the dollar and the euro and the regular currencies. There's no real evidence that this is actually true. The Ukraine invasion, you can look at the elections of Trump, all these things, and you really haven't seen the substitution out of the real world assets and into Bitcoin.
The act of trading Bitcoin is also risky.
There's no way to get the money back once you've sent it. That's the whole idea of a decentralized network with no management and no leadership. You can't say, freeze my account, or here's an injunction.
Bitcoin users can also be prone to cyber scams and malware attacks that target people's passwords, that are also referred to as private keys.
And in many ways, these are just recycling ideas that you already see in real life, chain letters, pyramid schemes, and so forth. And just like you should be very careful before you send regular money to people, it's the same with crypto. You shouldn't, take strangers' words at face value.
While wallets, service providers, and applications are prone to being hacked, the network itself remains secure.
The Bitcoin network has never been hacked in 16 years now. It's widely regarded as the safest, most robust computer network ever. There are incredible security issues with the regular financial system that we all end up paying for through fees, and crypto has none of that.
Bitcoin is still fairly uncharted territory in terms of regulation. While the SEC approved the trading of spot Bitcoin and ETFs, it's historically been skeptical of crypto. And with Trump back into the Oval Office, he intends to have a friendlier approach to crypto that could change the landscape. So, with the pros and cons in mind, should you invest?
Nobody should be investing in this who can't afford to lose their investment. You should treat this like any other asset, and an investor should be diversified and really try to own a little bit of everything. Crypto has now grown big enough that it's maybe 2% of all the investable wealth. The optimal rule for you is to put about 2% of your money into crypto. And if you're taking any more risk than that, be prepared to lose your money, because it can go down. You might do very well, but there's no guarantee.